Have you ever sat down to trade, felt completely ready, and then watched yourself do the exact thing you promised yourself you wouldn't do? You held a losing trade too long, or you cut a winner you shouldn't have touched, or you took a trade you had no business being in and you knew it while you were doing it, and you did it anyway. And the worst part wasn't the loss. The worst part was that feeling afterward, that quiet, suffocating voice that says, "What is wrong with me?" I know that feeling, because I lived with it for years. And here's what no trading guru will actually say out loud. The reason you're not profitable isn't your strategy. It's not your indicators. It's not your entries. It's not your risk management system. It's you. More specifically, it's what happens inside you the moment real money is on the line. In my years of trading and coaching traders who trade the financial market, I've watched some of the most technically advanced traders who could read the chart beautifully, traders who are very brilliant, traders with an edge that genuinely works. And I watched them blow up account after account. Not because the market outsmarted them, because their emotions did. I was one of those traders. For years I thought I just needed a better system, one more course, one more indicator, one more tweak to my entries, and I kept losing. Not randomly, consistently. The same mistakes, the same patterns, the same self-destruction on repeat. It took me a long time and more money than I'm comfortable admitting to finally understand. I was solving the wrong problem the entire time. Today I'm going to show you exactly what your emotions are doing to your trading, where it comes from, and, most importantly, a practical way to start rewiring it. But I need you to stay with me through the uncomfortable parts, because this is where most traders look away. And looking away is exactly why nothing changes. Here's a harsh reality most trading courses never touches. When you sit down at your screen to trade, you don't just bring your strategy, you bring everything about you. Your fears, your need to be right, your relationship with money, your identity, your worst day last week. All of it shows up on the screen whether you invited it or not. And the market doesn't care about any of it. The market is completely neutral. Every single move is based on the collective actions of every institution, every retail trader, every algorithm participating in the market at that moment. The market doesn't know you exist. It's not targeting you. It's not punishing you. It just moves. But here's what you do. You watch that price move and you make it personal. And as a result, when a trade starts going against you, your need to be right kicks in. So you move your stops or hold losers for too long in hope they would reverse because you can't stand the feeling of being wrong again. When a trade goes in your favor, something else fires. Take it now. What if it disappears? Grab it while you can. And so you close too early again, cutting the exact winners that were supposed to fund all your losers. Hope on the downside, fear on the upside, both working against you at the exact moments that matter most. And here's the part that stings. This isn't a character flaw. That is exactly how the human brain is wired. Your brain was built to keep you alive, to avoid pain, to seek safety, to react fast in dangerous situations. In any other environment, that's a strength. But in the financial market, it's a fatal weakness. The market is designed, not intentionally but structurally, to trigger your survival instincts constantly. And when survival instincts are running the show, there is no room for discipline, patience, or rational execution. You're not trading anymore, you're reacting. And a reactive trader is a losing trader. Now let me explain what I meant by that. Your emotions don't just control how you feel. It actively distorts what you see. When you're afraid or feeling fear, that emotion distorts your perception of the market in a way that you stop seeing opportunities in the market. Instead, you see threats. You hesitate on perfectly valid entries because your brain is screaming, "What if this one fails too?" And as a result, you enter late or not at all, and then you watch the trade play out perfectly without you. And that feeds the fear. And in a case where you're angry, after a string of losses, after a stop that shouldn't have hit, your perception shifts. Now you want the money back. You take trades you wouldn't normally consider. You increase your size. You tell yourself, this one is different. You're not trading your system anymore. You're trading your wounds. And all these problems have nothing to do with your strategy. They're a result of the emotions you bring to the market. But here's one of the emotions that holds most traders down. It is hope. Throughout my years of coaching traders, I have come to realize that hope might be the most dangerous thing in a trader's psychology. When a trade is going against you and the correct action is to close it, hope shows up. It whispers, just give it a little more room. It'll come back. You've been right about this one. So you hold, and hold, and hold, until a manageable loss becomes something that genuinely damages your account. Fear, greed, anger, hope. These four emotions are quietly running the accounts of most traders. Not the strategy, not the system. The emotions wearing the strategy like a costume. And here's what makes this so hard to catch in real time. Every emotional decision feels rational in the moment. Your brain builds a perfectly logical story for why you should hold that losing trade, or exit that winner early, or chase the move you missed. It feels like thinking. It isn't. It's feeling dressed up as thinking. I did this for years. I would make a decision driven entirely by fear or greed and immediately justify it with logic. It felt like discipline. It wasn't discipline. It was self-deception. And it cost me everything I put in during those years. Now here's what I figured out that entire changed how I approach the market. This isn't something you cannot think your way out of. Most traders try. They tell themselves, next time I'll be more disciplined. Next time I won't revenge trade. Next time I'll let the winner run. And then the next time comes, and the exact same thing happens. Because the problem was never knowledge. The problem is that in the heat of the moment, your emotional brain overrides your rational brain. Not sometimes, every single time, until you train it not to. There's a reason for this. Your brain processes emotional signals roughly 5 times faster than rational thought. By the time your logical mind registers what's happening, your emotional response has already fired. The reaction is already in motion. This is why you can know every rule, understand every concept, and still break all of them the moment real money is on the line. Knowledge was never the answer. Reconditioning is. The small percentage of traders who actually make it, they still feel fear. They still feel greed. What's different is that they've trained themselves not to act on it. They've conditioned their minds to stay neutral when their emotions is screaming at them to react. That doesn't happen from reading. It doesn't happen from watching videos. It only happens through deliberate, consistent practice. And it starts with one shift that changes everything. I want to talk directly to you for a second. If you're watching this and you recognize yourself in what I'm describing, the revenge trades, the hope trades, the watching yourself do the wrong thing in slow motion, I want you to understand something. That recognition you're feeling right now, that discomfort, that's not a weakness. That's the beginning of the actual work. Most traders never get here. They stay on the surface. They keep changing strategies, keep blaming setups, keep looking for an edge out there, and they never look in here. You're looking. That already puts you ahead of where I was for a long time. Now let me give you the shift that made the difference for me. Most traders measure success by P and L. Win, feel good; lose, feel bad. Their entire emotional state is controlled by outcomes they cannot control. And that is an exhausting, unsustainable way to approach the market. The shift that changes everything is simple, but not easy. You stop measuring yourself by results. You start measuring yourself by process. Did I execute my plan? Did I follow my rules? Did I manage my risk the way I said I would? That's the only scorecard that matters, especially when you're still building consistency. Because here's the truth. Over any single trade, over any single day, the outcome is essentially random. You can do everything right and still lose. You can break every rule and still win. Short-term results tell you almost nothing about whether you're actually improving. But over hundreds of trades, over thousands of executions, your process compounds. Good process produces consistent results. Emotional process produces a slowly draining account. When you shift your focus to process, something else happens. The emotional charge around individual trades starts to fade. Because you're no longer attaching your identity to this trade, you're judging yourself on whether you followed your rules. And that's something you actually control. Here's exactly what I did to stop letting emotions run my trades. I call them the 6 keys. The first key is to name the emotion before you act. Before you enter or exit a trade, pause. 5 seconds. Ask yourself, what am I actually feeling right now? Fear, hope, anger, excitement? Just naming it interrupts the automatic response. It creates a gap between the feeling and the action. That gap is where your discipline lives. The second key is build a pre-trade checklist and make it non-negotiable. Write down the exact conditions that must exist for you to take a trade. Before every entry, go through that list. Read out loud. Not in your head, out loud. This forces your rational brain back into the conversation. If every condition isn't met, there is no trade, no exceptions, not one. The third key is accept the loss before you enter. Before you click, you must have already decided, if this trade hits my stop, I am genuinely okay losing that amount. Say it out loud, mean it. If you can't honestly accept it, your size is too large. Reduce it until you can. A calm trader executes. A stressed trader reacts. Your position size determines which one shows up. The fourth key is review behavior, not just results. After every session, don't just look at whether you made or lost money. Ask, where did I act emotionally today? What triggered me? Write it down. Your emotional tendencies are as repetitive as price structures. Learn them the same way you'd learn a pattern on a chart. The fifth key is trade smaller until calm is your default. If you're feeling any strong emotion around your trades, dread, desperation, excitement, your size is too big for where you are right now. There's no shame in that. Drop your size until a loss feels like tuition and a win feels like confirmation. Calm is a skill. You practice it at low stakes first, the same way you practice anything else. The sixth key is make peace with losing. This is the deepest shift and the one most traders resist the longest. The traders who succeed in the financial market aren't trying to eliminate losses. They've accepted that losses are built into every profitable strategy that has ever existed. The goal is never to stop losing. The goal is to lose well, quickly, cleanly, without drama, and to let your winners run without interference. The best traders aren't the ones with the best entries. They're the ones who handle losing the best. Your emotions were never the enemy. They're just running a program that wasn't written for financial markets. It was written for survival. For a world where danger was physical and immediate, and where the fastest reaction kept you alive. The market is a different environment entirely, and it requires a different program. That program is built through repetition, through honest self-observation, through the willingness to look at yourself clearly, even when what you see is uncomfortable. I spent years looking outward, at my strategy, at my entries, at the market, and the losses kept coming. The day I started looking inward, everything started to shift. Not immediately, not dramatically, but steadily. The traders with consistent rising equity aren't superhuman. They're not smarter. They're not more talented. They just chose to look inward when every instinct told them the problem was out there. You already know more than you think. You have more self-awareness than you're giving yourself credit for. Otherwise, you wouldn't still be here, watching this, asking these questions. The question now is whether you're willing to master the one thing the market will never let you avoid: yourself. That's where consistency lives. Not in a better strategy, not in a new indicator, but the version of you that's being. Through every uncomfortable trade, every honest review, every moment you choose discipline over reaction. That version is closer than you think.